Hey, what's up guys? Ben Oberg from Millionaire Mafia Crypto Mastery again. In this module, we're going to be talking about the Fibonacci Retracement and Extension tools. These are tools that can actually not only help you to analyze entrance and exit points, but also to do some sort of predictive analysis as to where the market's going to go on any coin. The Fibonacci sequence is used not just in cryptocurrency, it's used in Forex, it's used in stocks, it's used in many other financial management aspects, not just in cryptocurrency, and it can be found all over the world. It's a mathematical equation, a pattern that is seen in the universe, in nature, in galaxy formations, and asteroid fields everywhere. And historically, big Forex traders, big stock traders, big cryptocurrency traders use it to manipulate the market, set their entrance points and their exit points. And so if we know how to use these tools, we can do the same thing. We can short the market, we can figure out where to place entrance and exit points, and we can identify where this is happening. So I'm going to be showing you in this video, I'm going to show you the retracement tool, the extension tool, and I'm going to be pointing out a couple key parts on this chart we have right in here. And then I'm also going to show you as proof where this actually happens in active markets on the exchanges. So you'll be using, I'm here in Coinigy, I suggest that you do this in Coinigy. Most exchanges have a Fibonacci tool. Coinigy is going to give you a very accurate one. So it's something that you could have your exchange up and then also your Coinigy to be able to do the retracements and the extensions on Coinigy and then go over and place your trades, your entrance and exit points on the exchange. So it's this tool right here that you're going to use. You have trend-based Fibonacci extension. If I click this, there's a whole bunch of tools in here. The ones we're going to use are the Fibonacci extension and the retracement. We will start with the retracement, okay? So what I have here is the Bitcoin market in the last 8-9 days here on, a one-day calendar or whatever. I'm just looking at the past 9 days here. And we will see that here's kind of the top of the market in this area, and then here's the bottom way down here, and it's gone from going out of kind of a bull market into a bear trend, turning around, having a trend reversal, and then going into a bull market again. So what we're going to do to develop the retracement is we're going to start by using the Fibonacci retracement tool by starting at the top of the market, which you can see right here. And then we're going to draw it down to the bottom of the market. And if you look really close, you can see a capitulation candle right down here, a little red one right there. So I'm going to place it right in there. Now, there's a couple settings I want to do in here. These are different fib levels, essentially, but what you need to know is that some of these levels are not actual fib levels. The developers of this program have placed certain levels in here that aren't. I've already removed them, but I will tell you that you normally will have a 0.5 level and then like a 0.2 something level in here. You want to go ahead and remove those because those aren't actual fib levels. So once you've drawn it out, if you just right click it, this little screen will pop up, and just click the settings right here, and then it's going to bring up all the different levels in here. So usually what Coinigy will program in here is a 0.236 level and a 0.5 level. I want you to know these are not actual fib levels. And oftentimes on your exchange, it will also show a 0.236 or a 0.5 level. So we just go ahead and uncheck these. So make sure you can see they pop back up here. Make sure to uncheck 236 and 0.5. All right, and then you can just click OK, and then boom, you're done. I'm going to just add some text in here, and we're going to call this our retracement. This is the Fibonacci retracement tool, and we're just going to add that right in here, and we're going to call this retracement. Okay, boom, boom, boom. Okay, we're good. We're going to call this retracement. Now what this is used for is to find historical levels of buyer support, seller resistance. Oftentimes the fib levels indicate areas where historic traders will sell out, or they will buy in or short the market. And if we can learn to identify these areas, we will be able to know where to place our trades, where to exit our trades, and then also figure out some predictive analysis on where the market is going. So to use the retracement tool, what we're doing is we're identifying the top of the current market, which was just right up here, okay? And then we're identifying the bottom of the current market, which is right down here. So it's come out of its bull trend, it's had a reversal, and it's gone down here. Now the retrace would be considered right in this area, from this low point right here up to here. So if I take like an arrow right here and I draw one out, our low point being right in here, and then another arrow putting it right here, this would be our high point. Our retrace is between these two arrows, okay? So it's gone down and down and down and down into a bear trend, out of a bull trend into a bear trend. It's hit bottom, and then it's retraced to this area before going back down again and failing, all right? Well, what you need to understand is that it usually does this at fib levels. So if you can see, on its way down, it had a decent amount of resistance coming from here down to here. It bounced off the 0.618 level, almost tested the 0.786, and then had a huge area of resistance. It failed. It bounced on this lower one right here at 0.382. It bounced on it, kind of hit it, came back up, bounced and failed again, came back up, bounced and failed again, had some significant support and good volume, broke back through the 0.618 level, kind of did a little bit of no man's land, and then it failed drastically down to the 0.382 level, where it touched bottom down here at 0, and then it had its retracement. Retracement meaning sort of like a recovery, okay? It's recovered to a certain point. So it retraced after it came down in its bear market, it retraced up to here. Well, if you noticed where it retraced and found some resistance and support area right here was right about at this 0.382, this first fib level is where it found that at. You can see it literally bounced right on that line. Like if I line that up right in there, you can see it bounced right on that multiple times, and it actually ended up failing, and it hung around this area where it bounced above it, bounced below it, bounced above it, bounced below it, and you can see that happened right here, and right here. And then it continued on upward, where it has been struggling currently to break past the 0.618 fib level, where it's gone above it, below, above, below, and it's literally just hovering right on it right this second, just right above it. So if you see this, you can actually be like, wow, like you can see this pattern. It's true. This is what's happened. What's actually happening right here, though, is if this was, say, a cryptocurrency like Ripple or Dogecoin or Syscoin or Siacoin, and I had this chart, we were looking at an actual alternative currency and looking to create entrance and exit points on it, we would use this tool to understand where sellouts are happening and where lows are happening and the direction the market is going. So what we see here happening with Bitcoin is a very, very, very hot area of previous buyer support, seller resistance in here, a very hot area of it, because we can see if I put an arrow right here and I put another one right here and I put another one right here and I put another one right here and another one right here and another one right here and almost right there. You can see this whole time, look, those all line up. Every single one of these lines up. All these arrows are all in the same plane. They're all on this 0.618 level. So this is a historic area of people that hold Bitcoin that are selling it out at these levels. They're shorting the market. They're not allowing it to go up higher. It's not receiving enough support to go up higher, and it's struggling at this level. So right now, it's kind of a, who knows? Is it going to continue going past this level and surging past it and testing the next fib level? Or is it going to kind of hit this and then eventually fail and go back down? What is it going to do? And so when we can identify these historic areas of buyer support, seller resistance using the Fibonacci retracement tool, we can then do something else that really helps us. We can go, all right, well, if this is the area of buyer support, seller resistance that it historically hits, I can simply place my exit points right below this. So instead of getting the heat and playing tug-of-war and not necessarily being able to sell, why don't I place my sell orders right below where these historic bulk traders are trying to sell out, creating these really tough areas to break through, these really tough areas to test. So I can increase my chances to create some profits by trying to sell out maybe a little bit below. And that way, I'm being very smart in the market, making really good decisions as to increasing my profits or entering trades. Now, what we can do with the retracement then is we can see that we have a retracement from here to here as I identified. That was our first level of retracement. It went down into a bear market. We had a bear run. It hit bottom and then it retraced to this level where it really bounced along the first fib level, 382, several times. Went through it here, came up twice, went down 3, came up 4, went down 5, came up 6, touched on it again 7, and then broke through. This is a very hot area of buyer support, seller resistance. So what this would mean is if you'd owned down here, you would have created some good opportunities to sell in here, or maybe perhaps even rebuy when you see that it broke through again and sell up here. You could have even rebought here and then sold up here. So these are levels you can identify to place your buys and sells in. Now what we can do is we can get out our extension tool and use this to understand where the market can potentially go in the future. And one thing that you will want to understand, for example, is it's kind of hard to see this bottom level like 0 right down in here at 12,049. Basically this top level right up here where it's actual like 100%, it's very top level. It's kind of hard to see right in here because it's running out of the screen. But what this is basically saying is that in order for the market to recover 100% to its previous all-time high right in here, it would have to reach this level. In order for it to recover 78.6%, it would have to reach this level right here. In order for it to recover 61.8%, it would have to reach this level right here. In order for it to recover 38.2%, it would have to reach this level right in here, is basically what that means, all right? So let's use our Fibonacci extension tool now. To use the extension tool, this is going to help calculate our retracements and figure out if the market's going to continue potentially going up or if it's going to battle it out and then tank downward into a bearish trend. Okay, so we'll use our Fibonacci extension tool. And how we use the extension tool is we start out by placing it at the all-time low, which is going to be somewhere right down in this area, right down in here. And then we go to our first significant high, which would be right about here, and then where we end up failing and coming down to our next significant low again, all right? And what we're going to see here is an area of, once again, support and resistance at this first fib level. Do you see how after this, it continues to play it out right here and battle it out at this first fib level 1, 2, 3, 4 times before finally breaking it through? You can see it goes over it once, it goes under it, so that's twice. It goes over it again and hovers on it for quite a while right there, and then goes over it again, comes down, touches along it, and then finally says, okay, you know what, and it comes up with significant force, and it breaks through the second fib level again, but then battles it out there, okay? So we can see right in here that our first fib level is broken through right in here. You see that? Right in here. Now what we can simply do is we can move this on and we can kind of manipulate this again. So what we'll do is we'll move this whole extension tool over to the next market. So we'll move it, this top one, to right here, and then we'll move the bottom one after the market to the bottom right here, and then we'll move it to its last all-time low before hitting this next high in the market, which would be right here. Okay, and we'll see once again that we're playing around right here. You see it's tested the first fib level right here twice. It's tested through, it barely broke through right there, and then it failed. And it's been hanging out right around here, and it tried to go through again, and it failed, and then it really hasn't come up against and really tested it yet again. So with this, it would be an indication that perhaps it's going to kind of weaken a little bit before it gets stronger again, because it's tried to test this 38.2 level, this 382 level twice. It's failed, and it hasn't really touched on it again. And as we can see over here, it kind of battled it out, and then it continued going up. It did climb through, and we received some more resistance and support at this next fib level. Do you see this? Do you see what I'm saying, guys? It adds up every time. 0.618. Look at this. We come in here and we see that it reaches this next fib level and it battles it out there. And then it breaks through with force, and the market ends up recovering 100%. You see way back in here where we had drawn out this one, it actually ended up recovering 100% and actually pushing past that. So it actually did recover, and then it tested that 100% level right here, and then it went through it and it failed, and it's been coming down again, and right now there's some resistance and support once again at the 0.786 level. So you can use these fib levels to identify what the market is doing and predictively analyze where it is going. A lot of times what you're going to see when it tests a level, like see how it tested here twice, a lot of times when you see it's going to test twice, which this could be symbolized as a double top. We've learned these patterns already. If you see this happen, a lot of times you're going to see in the short term, you're going to see a reversal. And in this 1 day period right here, we saw a reversal. It tested this level, it tried to come up, test this level, it failed, bounced around towards a lower fib level again, came up, tried to test it, and then it failed drastically. And that was formed a double top right there. Then it hit bottom, it found support, came back through, broke through with significant force, and then came back up to this next fib level, fiddled around there, battled it out, and kept breaking through, broke through the next one, and then came up to the next one, lost support, had a very strong force of resistance, and then came back down, now battling it out at 786. So when you see this, you can learn to identify areas where you can buy low, sell high in bull runs. You can create short-term profits in bear trends, and you can predictively analyze where the market is going to go. So if, for example, the 4th, the 5th, and the 6th of this month haven't happened yet, the 4th, the 5th, and the 6th, so say from this area right here over, didn't happen yet, from like right here over, well, still from everything, I'll take this arrow to symbolize, like say this area right in here hadn't happened yet, like nothing over here had happened yet, okay? None of this had happened yet, right in here. If none of that had happened yet, I would still have all this data to the left of me showing this area of buyer support, seller resistance. I would have been able to see and recognize a double top has occurred right here and known that in the next short term we might see a little bit of a recess into a bear market, which we did. And then I would have seen a huge amount of volume coming down and just significant bear candles right here, just recessive red candlesticks, and then I see it picks up support and it starts climbing back up to test that next fib level, and I see it break through. Oftentimes if it breaks through with force, it's going to continue to shoot up more. Yet again, just an indicator that I can use to figure out where I want to place my exit points and where I want to enter. Would have been a really good entrance point here, seeing that it tested and knowing that this is an indicator of a double top, and maybe bringing out my other tools like RSI and Bollinger Bands and seeing that it probably broke through on both of them would have been an indicator that it's going to tank. And once I saw that it would have hit the bottom Bollinger Band, or had a relatively low RSI, meaning it got oversold, that would have been a good time to buy in, knowing that it's probably going to go back up, test this fib level, and then break through. And then seeing an area of slowed down volume and very little volume happening right here, long upper shadows on a green candle symbolizing that it's been overbought, that would have been an indicator for me it's about to maybe have a little bit of a trend reversal or a reversal into sort of a short time bear run. So these are all indicators that you can use, and I'll label it real quick. This is the extension tool here, this is the retracement. So I'll just go right here. We'll label it right out right there, and we will put extension. All right, so you have your retracement, you have your extension tools. And once again, Coinergy right here, you're going to click this, and you're going to be able to go to both of them right in here. You have the retracement, you have the extension. Those are the tools that you can use. And just as recap, you can simply manipulate your extension tool to identify your markets. So I started off with the extension tool, this one right here. I started off down here at the low. I put it at the first significant high and then the next significant low after that high. And then to figure out what's going to happen in the next bit of the market, I went to the next all-time low relative to the market, the next all-time high, and then back to the next all-time low. And then I could take this and I could move it again, and I could go and put it right here on the high. I could put it right here, the low it hit after that high, and then I could place it on the low that it was right before. And once again, it matches up, seeing that resistance and support were met right in here, and resistance and support were met right in here. So it's very accurate. And the next thing that I'll show you is if we actually go over to a chart in the exchange on a coin, we will see that this is very apparent. So for example, I have come up here onto Digibyte, DGB, and you'll see once again it adds a 50% level. It adds a level in here on Bittrex that's not an actual fib level, so don't worry about that. Take that out when you're using it inside Coinigy. You can't remove it in Bittrex. But if you notice right here, at 100% we have some buyer support, seller resistance met. If this continues going up, see this 138.2 level, the next level that it could test if it doesn't fail and shoots through 100. This next level that it could test is about 940, somewhere right in there. So oftentimes what you're going to see is bulk sell orders placed in areas like that. So if we go down here, I have brought up these levels in here. So you see right around 8,900, we just have like 6-digit and some 7-digit orders in here. 162,052, 139, 365. We have a 2 million and a 4 million. But if we find that 940 area and we just go into that area, look at what we see in here. We have some 1.2 million, we have some 3.9 million, we have some 3.1 million, we have some 1.1 million, and then we have some people that have probably been a little bit smart and said, you know what, these historical traders are selling huge bulks. Look, 36 Bitcoin, 11 Bitcoin, 30 Bitcoin, 10 Bitcoin. You have like 70, 80 Bitcoin volume going on right here. So some of the littler guys are saying, hey, I recognize that and I'm smart and I use fib levels, so I'm going to place my trades right below there so I don't have to worry about competing with these guys. And that's what happens in here. So now you can see everything put together from Coinigy to an actual coin chart and an alternative currency on the exchange. You can see that it makes sense. All right, I'll see you guys in the next video. Once again, do not use one indicator and one indicator alone. Always trade with leverage. Use 3 indicators. Use your RSI, use your Bollinger Bands, use any sort of other indicators, use media, use active developments in the coin to develop hypothesis before you make your entrance and exit points so you don't lose out. We'll see you in the next video.